Asian stocks declined on Wednesday after U.S. President Donald Trump told the Economic Club of New York that Beijing wants to make a trade deal, but gave no details on how talks were progressing while investors awaited clarity on the first phase of an agreement. Also, the U.S. president threatened more tariff hikes on Chinese imports if talks fail to produce an interim agreement. Escalation in violence among ongoing protests in Hong Kong weighed on investor sentiment as well. Against this backdrop, Hong Kong's Hang Seng Index led losses in Asia as it fell 1.82%. In China, the Shanghai Composite was down 0.33%. Japan's Nikkei 225 declined 0.85%. And overall, the MSCI Asia ex-Japan Index was 1.05% lower. In Europe, stocks were also lower, digesting the message from Trump amid concern over the trade talks, as the Pan-European Stock 600 was down 0.2%, dragged down by bank shares. As for corporate earnings, ABN AMRO reported a 24% drop in third-quarter net profit. Shares of the Dutch bank fell nearly 4%. On the data front, UK inflation dipped to its lowest level in almost 3 years in October. Consumer prices are rising at an annual rate of 1.5%, down from 1.7% in the previous month and lower than the 1.6% forecast. Meanwhile, Eurozone industrial production exceeded expectations to increase for the second consecutive month in September, rising 0.1%. In the U.S., CPI increased 0.4% last month, the largest gain in the CPI since March after an unchanged reading in September. On a yearly basis, the CPI increased 1.8% after climbing 1.7% in September. The core CPI rose 0.2% after edging up 0.1% in September. And as for stock markets, the Dow Jones Industrial Average hit an all-time high on Wednesday, mainly as Disney stocks rallied over 7% after the media giant said its Disney Plus streaming service got more than 10 million signups after launching on Tuesday. The S&P 500 registered a record-closing high, ending the day up 0.1%. The Nasdaq Composite closed just below the flat line at 8,482.10. The sentiment turned sour by the end of the session amid reports that U.S.-China trade talks have hit a snag over agricultural purchases. Besides, Beijing is reportedly resisting requests from Washington to curb tech transfers as well as enforcement mechanisms. In currencies, the dollar was little changed against European counterparts, but accelerated the decline against the Japanese yen among rising safe haven demand. The USD Japanese yen slipped further below the 200 DMA and extends losses early on Thursday, threatening the 108.60 intermediate support zone. The Euro-US dollar dipped below the 1.10 handle and remains under the selling pressure for the 8th out of the latest 9 days, with the euro remaining vulnerable to further losses amid growing concerns over the state of the German economy and lack of progress in the US-China trade talks. By the way, Powell's testimony in Congress failed to impress dollar bulls. The Federal Reserve governor confirmed that policy is on hold unless there is a meaningful change in the outlook and noted that the risk from low inflation is greater than high inflation, which sounded a bit dovish. At the same time, he conveyed a positive outlook for the U.S. economy and reiterated the central bank's data-dependent approach to policy. In commodities, oil prices extended the recovery, with Brent targeting the $63 handle. The market was aided by the API report that pointed to a crude oil inventory draw of 500,000 barrels for the week ended November 7th, compared to analyst expectations of a 1.649 million barrel build. Also, OPEC chief Mohammed Barkindo suggested that U.S. shale supply growth might slow next year, which supported prices as well. However, the upside potential in the market remains capped by the unresolved trade war between China and the United States that have dampened oil demand growth prospects for the next year. And that is all for today. Thank you so much for watching. Please subscribe to always be in touch with the latest market news.